Welcome to the midweek macro for Wednesday, the 10th of December 2025. I did mention earlier on Substack that I would wait until at least it was around Federal Reserve time. Obviously, it's quite a big decision that's being made today. I believe, if I'm not mistaken, they have actually cut, but I'm just waiting for that to load. I'll touch base on that towards the end of the video. Uh, as you would have seen in the title, first things first, silver soars over $60. And that's obviously very good news. Well, that's good news if you've taken a position in physical silver, or you're in the mining stocks, or you're in an ETF, whatever it is. If you have exposure to silver, then chances are you're probably having a very good time at the moment. I should point out it is just gone 10 past 2 Eastern time, and silver at the moment is looking at just under $61. It's on $60.84. It depending on what chart you look at, it had crossed $62 last night during Asian trading. Now, what's fascinating with silver, and I know that a lot of people are going to get excited, and the whole purpose of the contrarian capitalist is to sometimes put a lid on things in a good way and provide a bit of background to why silver's doing what it's doing. So I'm just going to go and run over this scenario again. I'll look at it from a demand side and a supply side as well. Also, I should point out, if you can hear drilling in the background, I believe the people upstairs in the apartment block are having some work done. Apologies if you do hear some drilling in the background. So if we look at silver, let's look at the demand side for silver. That industrial demand is continuing to increase, whether that's more solar panels or more nuclear warheads or more electronics. Silver use is increasing, so the industrial uses demand for silver is increasing from that point of view. We're seeing in retail that demand is quite well established in places like China, India, etc., but also in the West that the the retail demand, has started to increase as well. So from a demand point of view, just those two factors alone puts pressure on the demand side. Now, I wouldn't advocate going for an ETF, an exchange traded fund. Personally, that's not my thing. Although saying that, the commodity wrap does look at the SIL briefly every week. But some people who do not want physical exposure to silver might decide to plow, their funds into an ETF. Well, those ETF flows are also quite positive to an extent for the demand of silver, whether that's paper silver. Sometimes that might trickle through to the physical market. It's rare that that happens, but it can happen. The point is that we are seeing a positive input in terms of ETFs. If we also look, I can't get my words out today. My apologies. I'll just take a breath. If we look at central bank buying as well, then we're starting to see a lot more of that come through with regards to silver. Russia, I believe, have a strategic reserve. If not, they are building a strategic reserve in silver. We also have India as well. I don't think China's documented it, but it wouldn't surprise me if they do have a strategic allocation to silver. So all of these things are very, very positive for demand. Now, on the supply side, what's also well documented within the silver space is that the physical silver market is in its fifth year of deficit. So 20, 21, 22, 23, 24, and 25 actually. So fifth or sixth year of deficit. And also the forecast from UBS for 2026 is that two things are likely. Number one, 100% of silver that is mined is actually going to be allocated for industrial demand. I think in 2025 is about 96%, if I'm not mistaken. So it's already quite high, but that allocation could be 100% in 2026. And UBS also predict that the physical shortfall is going to be just the 293 million ounces. So we've got all these demand factors, and then we've got these supply factors as well that are working in hand. So people can point to demand all day and go X, Y, and Z, like I've just done, and that makes a compelling argument. And if you look at it from a supply side point of view, where supply is tightening because you can't just click your fingers and the mine comes online. Remember that about 70% of silver mined in the world is actually a byproduct. So 30% are silver specific mines, 70% is a byproduct from, copper, zinc, whatever it might be. And again, you don't just click your fingers and a silver mine comes online. So you put those two things together, and because of the industrial uses, etc., that price has got to go a lot higher. Now, I know there's going to be talk about, oh, Rob, there's manipulation in the silver market. There's, spoofing. There's all these issues with, central bankers trying to, crush the price of silver. Yeah, I'll hold my hands up. Absolutely, that does happen. I'm a little bit immune to that, to be honest, because I'm not trying to trade silver. For me, it's about the physical position in silver. I imagine for most of you listening to this as well, it's also about the physical position in silver. And when you look at all of the factors, no matter whether it's supply, no matter whether it's demand, then you will see that silver is ultimately going to go much higher. How high, you ask? Well, it could be a range of numbers. If you look at silver in comparison to M2 money supply, as it is at the moment, then using that metric, silver could go to about $680 per ounce. If you look at various channel graphs, and podcast guest Tom Bradshaw done this, that episode is now out to all subscribers. I highly recommend you check that out. He's a very good chartist, and he has charted out how silver can get to about $375. Again, that's using a mixture of Elliott waves, Fibonacci retracements, etc. I highly recommend you go and check out that podcast and video. I'll link to that in the post that comes with this video as well. So if you use those metrics, it could be $370, $375. If you look at M2 money supply, then that could be, just under $700. And if you take the absolute nucleus scenario, which is gold getting revalued, so that they peg the amount of gold they may or may not have in Fort Knox to the current US debt level, that will give you maybe about $150,000, $160,000 an ounce of gold. And then if that gold and silver ratio continues to break down, and that goes to 15 to 1, for example, then you could find an ounce of silver being around $17,000 an ounce. That's just some rough mathematics off the top of my head. I'm not saying that they're going to go that high, but I'm sure most people listening to this would agree that silver is very likely going to go to triple digits, i.e. at least $100. I'm a firm believer that anywhere between 250 and 500 is plausible moving forwards. We don't normally cover the gold and silver ratio on these videos, but I will just briefly bring it up. It currently sits on the month-to-month chart on bullionbypost.co.uk. The gold to silver ratio last month it is averaging 69.19. Ultimately, we're seeing the gold and silver ratio, breaking down. It has been over 100, maybe 120, around about 2020 and recently as well. But over the last 12 to 18 months, it's started to break down. It looks like it's going to continue to break down as well. You can see all sorts of different targets out there. Some people say 40 to 1. Some people say 30 to 1. I'm in the camp of 15 to 1. I think if you go back to the historical average, the historical norm, you're going to be about 15 to 1. I know in ancient Egypt and Rome, it was 2 to 1, 3 to 1. I know in medieval Europe, it was between 12 to 1 and 15 to 1. So I'm using that as the historical norm, so to speak. I think silver has the potential to go back down to that level. And of course, that would imply, we're sat at 70 to 1, call it at the moment. That implies silver has a lot of room to run. I should point out that don't take anything I say as financial advice. You should always do your own homework. More and more people have been asking me for one-to-ones. So there are prices and opportunities available for that. I'm running a special price till the 31st of December. As long as you book it in by the 31st of December, it's 2 hours. That's a one-on-one, by the way, one-on-one with myself. You can ask me anything, commodities, real estate, property, whatever it is you want. I'm all yours for 2 hours. Special price of $147. I'll put a link to that in the post that comes with this video as well. If you are a paid subscriber or founding member and you're listening to this, you do have a a discounted rate. And again, those promotions are behind the paywall in the market wrap and commodity wrap. If the silver price continues to increase, or that silver gold silver ratio continues to break down, that's going to play out as well. Now, I'm not saying that's going to happen tomorrow, but if you have a look at the charts, and even if you look at the last 12 months, even if you look at the last couple of years, you'll now see that that ratio is starting to break down. It will be very interesting to see what happens moving forwards. Keeping on commodities, I'm just looking at that Federal Reserve meeting at the moment. I'll get back to that in a second. Let's have a look at the commodities markets as we're talking about them. Gold currently trading at $4,211. It's up $14 on the week, so really not a lot going on there, which is good, to be fair, from a gold point of view. Silver, we mentioned, about just under $61. It had reached just over 62 depending on the chart, but it's currently trading at 60, 67. Looking at the chart that I'm looking at on TradingView, I should point out silver is up on the week at about 4% up on the week, $2.35 up on the week. Platinum here, platinum trading at $1,640. That's up $8 on the week. So again, not a lot going on there, to be fair, which is a good thing, because it might just be taking a breather before another move to the upside. And looking at palladium, similar story here. It is up $7 on the week. It is trading at $1,464 at the time of recording. We have down here WTI has taken a bit of a beating this week, down $1.66, currently trading at 58.45. It had gone down to as low as 57.66 during the week. One other chart to bring up is copper. Let me just bring that up. We look at a per pound basis here on the Contrarian Capitalist. We can see that is down on the week. It's down by 8 cents. It is trading at $5.37 per pound US dollars. In terms of guests on the podcast this week, the episode with Rudy Havenstein, that was released to everyone on Monday. The episode video with Tom Bradshaw. I highly recommend you actually watch the video because of the charting analysis that he does. He lays out the path to $375 silver, $9,250 gold, and also $350 oil. He believes that that is possible by 2025. And again, he's backed that up with charting analysis. That video is available to all subscribers. I highly recommend you go and check that out. And also the video with Trader Ferg. Most of you, I think, know who Trader Ferg is. He is very contrarian by nature. We spoke about tin. We also touched on coal a little bit, oil as well. And he was looking at various oil services, oil ETFs, and also two fantastic opportunities within tin as well. We did speak about PGMs, platinum, palladium, rhodium, looked at some opportunities there as well. That episode is currently out to paid subscribers. If you're not yet a paid subscriber, please do consider becoming a paid subscriber for early access to all of these podcasts as well. You'll also get access behind the paywall to the commodity wrap and market wrap every Friday and Sunday respectively. Starts at $9.17 a month if you do it on an annual plan. If you do it on the monthly plan, it's $11 US a month. All of that to help you to protect your wealth, defend your freedom, and outsmart the system. Even if you're yet to become a free subscriber, please do become a free subscriber, contrariancapitalist.substack.com. On Thursday, the 11th of December, I'll be chatting with Adam Rosenswag. You might have heard him on Peak Prosperity with Dr. Chris Martenson before. I'm really looking forward to diving into that conversation with Adam tomorrow. I'm hoping we're going to focus on coal, natural gas, oil, as well as copper, because the team at Goering and Rosenswag have a couple of differing views from other views that you might find out there as well. As per usual, that episode, once it's recorded, will be out to paid subscribers first before being released to free subscribers at a later date. So plenty to watch out for with regards to what's on the Contrarian Capitalist podcast. Before we dive into the Federal Reserve, I believe they've cut rates. I believe it's 25 basis points, but I am just looking for confirmation of that. Bear with me if my eyes wander off screen. I just want to go to a couple of other interesting articles that I've seen this week. Like number one is Cracker Barrel. Now, I reported on this a little while ago. I haven't done an in-depth dive on it, but I'm sure that you're probably aware of Cracker Barrel and their rebranding and the fact that, let's just say, it was a failure. So I've linked to an article on Zero Hedge because it looks like their stock has tanked, also because of revenues tanking. Because of that, I think Zero Hedge have labelled it Bud Light 2, or they've been Bud Lighted, so to speak. Hold my hands up. I've never been in a Cracker Barrel in my life. I'm sure most listeners are from the USA. I'm sure you've probably stepped in one in your lifetime. But I've put a link to that and that post. And again, that will be in the post that comes with this video. I've also looked at Indian refiners are looking to seek non-sanctioned Russian oil. Again, this isn't a surprise. This is what happens if you sanction countries. Then if the commodity itself is still relatively inexpensive, and I believe that WTI at around 58.50 is very cheap at the moment. It doesn't matter who you sanction, where you sanction them. If there's deals to be done between friendly countries, they will get deals done. So, we can read about whatever we want with regards to sanctioning Russia and their oil, or insert other country here. The point being, countries need and want oil, and it doesn't matter if the West or the USA or whomever has sanctioned a country. I'm sure the sanctioned country, in this case Russia, are going to have other friends around the world, in this case India. And again, as the commodity is so cheap, why not? You're going to do a deal. I think we would all do a deal if we were in the shoes of the Russians or the Indians. Again, I'll put a link to that in the post as well. Also, our wonderful friends at the BBC, like them or love them, they have reported that it is possible that the USA could ask foreign tourists for 5 years social media history before entering the USA. Again, I am not from the United States. I am from England, so it's easy for me to put a spin on this. To me, that sounds quite dangerous if you are asking for social media proof before being allowed to enter a country. I'm sure if you've got a differing view, please do leave me a comment. I'll be interested to know your views on this. Again, I'm very critical of things such as digital IDs. I'm also very critical of people that want to get rid of free speech. I think free speech is incredibly important no matter what way we look at it. You might not agree with the speech, you might dislike it completely, but the important thing that it is there. And we're seeing this around the world quite a lot recently. There's some examples in the UK with an ex-Premier League footballer called Joey Barton. You don't have to like him. You don't have to love him. You can hate him if you really want. But he's been given a suspended prison sentence for tweeting. Again, you don't have to like him. You don't have to love him. It's the precedent of free speech, I think, that's very jarring. I think it's the same here with if the US were to go down that route of asking foreign tourists for a 5-year social media history, because they want to see who, whether you like the current president or whether you agree with the policies or whatever it is. I'm not convinced about that. I think that's, again, a very, very dangerous thing to do personally. So let me just bring up this news here. I haven't really got anything else charts wise to bring you. Again, the key things to point out: $60 silver is here. I don't know whether it's going to hold in the short term. It might not. It might do. I do not know. But I certainly think that if you'd have said to most silver bugs at the start of the year that you're going to hit $60, possibly much higher, we still have a few weeks left of the year, of course, I think most people would have called you crazy. Yes, we will see what happens. Right, so let's have a look. Let me just bring up again, I'm just bringing this up on Zero Hedge, so bear with me if I keep looking away from the screen. I want to make sure this information that I give you is spot on. So we've got here, I'm not going to watch him live. Let's have a look. It seems to me, again on Zero Hedge, just trying to get the most accurate thing I could find. Fed's been largely flying blind from a macro data perspective. Yet hard data outperforming soft data. That jobs data is actually out on the 16th of December, by the way. So you've got a dot plot here talking about gold. Dum 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 dum. Fresh set of dots. Let's have a look. There's nothing actually on this article here that I can see. Oh yeah, 100% expected. Fed cuts rates favor of 9 to 3. Looks like it's a 25 basis points cut as well. So it's pretty much as expected. I think I'm reading that right. Thanks for bearing with me doing this live. I don't normally like to be this unprepared for something, to be honest, but thank you for bearing with me. Yes, it looks like it's a 25 basis points cut. So the range now between 3.5%, 3.75%, 3.75%, I should say, in a 9 to 3 vote. So it's fair to say the markets have already baked that into the cake. Let me just bring up the markets as well. So the S&P, I'm sure that this is going to go up and down depending on what Jerome Powell says or doesn't say, to be honest with you. But yeah, looking at this, the S&P is on the week, it is down ever so slightly. I'll tell you what, I'll do the days here. So S&P 500 on the day is up 21 points at the time of recording. The Nasdaq up 11 points at the time of recording. Dow Jones up 340 points at the time of recording. The S&P's 6,863. Dow Jones is 47,910. Nasdaq is sitting at 25,700. We've got the dollar index on the slide down. The VIX index is up on the week, down on the day. Again, with the Dixie, it's down on the week, down on the day as well. I think the Federal Reserve are making the wrong call here. I think that higher rates are what is needed in this scenario. And I'll finish off this video by saying this, that I appreciate that a lot of people listen to this. There's going to be some gold bugs, some silver bugs. There's going to be a lot of people that trade options and look at the market in general. What I would say with all of this is it's important for us to take a step back and look at the 30,000 foot picture. So we've just seen that there's been another rate cut here. It's likely, even if it's Kevin Hassett, even if it's not Kevin Hassett, as the new federal chair from May next year, regardless of who comes in, I believe, and Dr. Naomi Prinz and the team at Prinsights as well say the same thing, that the Fed is going to turn more dovish. Now, if the Fed turns more dovish, it is likely that we are going to expect more interest rate cuts in 2026. So as a result of that, if we're going to get more interest rate cuts, that is going to add fuel to the fire in terms of the equities. So in layman's terms, I would expect to see the S&P 500, etc., to increase. And I'd also expect to see commodities priced in the US dollars increase as well. So that brings us back to gold, that brings us back to silver, that brings us back to oil. Now, I know there are other dynamics at play, in especially in oil, and I'm hoping that Adam Rosensweig can go through them in tomorrow's recording. The point and the overarching point being that if we're going to get a more dovish Fed and we're going to get more rate cuts, whether you think it's right or wrong, doesn't matter what you think. With all due respect, the market don't care what I think either. We have to work with what we are given and what the market gives us. And if the market is telling us that we're going to get more rate cuts, then that is going to show us that things priced in US dollars are going to go up. So therefore, you can expect to see equities increase. You can expect to see the price of gold increase. Well, again, you could argue that it's actually the currency being devalued and not gold going up per se. I think they're both sides of the same coin, but you make of that what you will. Point being, gold is very likely to go up moving forward. So silver, oil, things that are priced in US dollars. So regardless of whether you think that the move that the Federal Reserve has just made is right or wrong, I personally think it's wrong. The market isn't interested in what I think. We can only work with what we are given. But if you take that 30,000 foot view, that might help you over the Christmas holidays. I know a lot of people like to do some work over Christmas and they like to think about, next year and the years ahead. I like to do that as well. I think it's a good thing to do. Then if you have this idea of where you think the market's going to go and you've got reasons as to why that's going to happen, then that should help to create your thesis and give you an idea of what to do and what not to do next year. I have no idea if a recession's coming next year. Some people say yes, some people say no. I've been calling for a recession for the last 5 years. It hasn't happened, but even a broken clock is correct twice a day. Unless it's digital, then it's once a day. Well, so we'll leave it at that. Please do, as I mentioned, do subscribe to the Contrarian Capitalist if you're not yet a free subscriber. Please allow me to serve you at a higher level as well. So do become a paid subscriber. You can also become a founding member. That is a one-off lifetime investment. You pay once and you're a Contrarian Capitalist for life. And I plan on running this channel for a very long time, so it will be worth that investment. I'm also, as mentioned, releasing new 2-hour calls with myself. Again, they are available. They'll be in the post that comes with this as well. I'm also working on other bigger ticket products behind the scene as well. So creating a really in-depth mastermind and also offering a personal concierge service for whether it's metals allocations or whether it's plan B or a mixture of the above. Again, I'm working on that. I'm hoping to release them either around Christmas or in January as well. So there's so much more that the Contrarian Capitalist can offer you moving forward. As always, have a fantastic week. Thank you in advance for subscribing and taking advantage of all the other offers, products and services as well. If you've got any questions, queries or concerns, please ping a message over to me, DM me on Substack. Feedback is always useful. It is the Breakfast of Champions. And just remember, have a look at that 30,000 foot view of the markets and try not to get caught up in the weeds of the day-to-day news and information. That's me out. Have a fantastic afternoon. I'll be back tomorrow with that podcast with Adam Rosenzweig.